Hey everyone, welcome to Finance Flicks Hub. If you're looking for well-timed insights on mining and metals, you're in the right place. Today, we're breaking down 3 mining stocks, all under $20 per share, that stand out in 2025 with big analyst backing and potential. We'll also walk through the macro trends shaping the metals market right now, so you get the full picture. Let's dive in. The global shift toward clean energy, electric vehicles, EVs, and infrastructure upgrades is fueling unprecedented demand for base metals, especially copper and precious metals like silver and gold. Copper, in particular, is increasingly critical. It's used in solar power systems, grid upgrades, EV wiring, data centers, and renewed infrastructure efforts worldwide. On the supply side, many copper mines are aging and/or grades are dropping, meaning less metal per ton of ore and rising production costs globally. At the same time, supply disruptions and delays on new mine developments are tightening the market. That tension between rising demand and constrained supply is pushing many analysts to forecast tighter copper metal markets going forward. For precious metals like silver and gold, increasing industrial use from electronics to solar and green tech is boosting demand beyond traditional investment use. Bottom line, metals are riding a powerful global trend: clean energy, infrastructure, and tech demand, but supply challenges add volatility. That makes mining companies with solid fundamentals and exposure to copper, silver, or gold especially interesting today. Stock picks: 3 mining companies under $201. Vizla Silver ECC, trading around $8.54. This mid-tier precious metals company has had a stellar year. Its focus, silver and gold, with high-grade underground mines, primarily in Mexico, plus exploration elsewhere. Recent milestone: their Terronera mine started commercial production recently. That ramp-up, along with successful integration of earlier mines, helped drive strong production growth. Q3 financials: slight loss per share, but revenue surged, showing rising output and growing operations. Why? It matters now. With silver demand rising globally, driven by industrial, solar, and tech use, and supply constraints mounting, producers like Endeavor could benefit disproportionately. 2. Hud Bay Minerals, HBM, trading at roughly $16.68. Hud Bay has gained substantial ground this year. Its operations include copper, zinc, gold, and silver, with a strategic shift toward copper and gold, away from traditional zinc emphasis. Why copper matters: given rising global demand from clean energy infrastructure, EVs, grid upgrades, and supply pressures, copper producers with diversified assets may be well positioned. Recent performance: despite a modest shortfall in quarterly expectations, the company reaffirmed year-end guidance. Analysts remain positive, citing free cash flow and the long-term growth outlook for copper and gold projects. 3. Vizla Silver VZLA, at approximately $4.62. This is the most affordable and riskiest of the picks. Status: not yet in full production. Vizla is advancing a 100% toned silver-gold project in Mexico, with the first production targeted in a few years. Project fundamentals: extensive exploration has revealed high-grade silver-gold veins. Recent feasibility study highlighted low capital requirements and strong margin potential. Upside potential: if everything goes well, construction permitting, project financing, and given the bullish environment for silver and precious metals, this could deliver significant returns. As always, higher reward comes with higher risk. Why these picks make sense, and what to watch. Why they stand out: they combine macro tailwinds, green energy, infrastructure, rising metal demand with company-specific catalysts, mine production ramp-ups, source development, strategic focus shifts. They offer diversified metal exposure: precious metals, silver, gold, and base metals, copper, balancing growth and safety. They sit in a market where supply constraints are real, which tends to favor companies already operating or close to production rather than speculative new entrants. Risks and what to watch. Metals markets remain volatile. Prices fluctuate with global demand, macroeconomic conditions, and geopolitical risks. Mining is capital intensive and subject to regulatory, environmental. For companies like Vizla, execution risk is high. Exploration, development, permitting, financing. Any misstep can impact returns. Thanks for watching this breakdown from Finance Flicks Hub. If you found this video helpful, make sure to hit subscribe and ring the bell. We'll keep bringing timely market insights, top stock ideas, deep dives into sectors like mining, energy, and more. Stay smart, stay informed, and I'll see you in the next video.